Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, November the 22nd, 2022. Got a lot of 22s going. Again, interesting day because the market revealed a little bit of information to me today that allows a count that actually is on the same path as both markets actually are. So when we're talking about the ES, I made a couple of changes to exactly what it's doing. So I'm going to just flip out to, let's do the 4-hour chart. We don't need to get all crunched up there. I'm going to open this up a little bit. So continuing to count an intermediate second wave. So it's a counter trend rally. And I continue to look at this A and B. Now I took away this I had labeled as C. I took that down and changed and looked at it being 1, 2, all of C, but in the ES only. So I got to stay that. So only here in the ES have I done this. So the NASDAQ is a different count, but both are going to end up in the same area as expected for what they're doing to complete this intermediate second wave. So here we are in the C wave. A minor C wave will consist of 5 waves of minute degree. There's minute 1, 2, 3, 4. And now we're in that 5th wave. So again, it comes into play for 40-12. And now we're there. So that's the 618 for the intermediate wave 2. But we already know and understand that it can go further, of course. So the next resistance level is 70.5, which is 40.8485. So in that area. And actually, I'd give it up to 4,100 because I'm sure if it got up there, there's going to be some algorithm that'll take it up to 4,100. That would be part of the plan. So, and actually, I can't necessarily say that that's where it stops because the next one after that is 4173. So you got 4085, let's call it, to 4100, and then 4173, possibly to 42. Now, can it do it tomorrow? Well, I would be remiss if I said no, absolutely not. And the reason being is that I think the market will be even thinner tomorrow, pre-holiday, literally pre-day holiday. But we have some strong, or could be strong, economic data coming out. And now I want to just kind of review very quickly what that is. So tomorrow we have durable goods orders and jobless claims at 8:30 Eastern. Then we have at 9:45 Eastern, PMI composite flash. And then at 10 a.m., we have new home sales and consumer sentiment. Only consumer sentiment has not been marked as a market mover. But I think it could be, if it's going to be based on what we see in jobless claims or some of these other numbers, then if consumer sentiment comes in as deteriorating and the consumers are basically like, well, we're not really very happy, then I think that could have an effect. A stronger effect than what I'm thinking. So those are the economic data that will be released tomorrow morning. Any one of them could produce, if depending on how they want to interpret it, okay? But any one could produce a quick pop. Now, from where we are, a pop of 83, and again, we don't know what they're going to do in Globex or where it's going to be prior to that number at 8:30. But a pop could take it to 40.85 to 4,100. Get a pullback, and then we get an additional, right? So inside this 5th wave, we got 1, 2, this would finish 3. So wherever this kind of ends up would be a 3. And then I think we'd come back in a 4, but we may end up going back and rallying up towards these higher levels that we just talked about. But again, once it's done, it should be a 5. And then we're really staring at pre-holiday in the face. So whether they want to close it and leave it up there will be interesting because don't forget that on Friday, even though it's a half day, Friday is also an expiration. So there could be a lot of that in play tomorrow as well. Here in the S&P, because Apple, Amazon, Google, Microsoft, Meta are a part of the S&P as well as the NASDAQ. So we can get that move that we have been talking about, and it could get us to the completion point for the intermediate wave 2. So much to say. And So that would complete that. So I've changed this. We continue to see an improvement. This is the 4-hour. Let me go down to the hourly chart and take a look at those moving averages. You can see that the 200 SMA, the simple moving average, continues to now mimic or go up at the same level as the 50s. And the 20 is turning, and see there, everything is just really walking nicely. So the momentum is there. We're seeing the squeeze here. That in and of itself kind of lays the groundwork that we could see that spring unwind to the upside. But that's unwinding spring to the upside, to me, is not necessarily indicative of continued follow through. So I think it would be a lesser spring, still strong, but I think we can get it off of the numbers that are coming and not necessarily, something else. So it could be quick. That would complete wave 3. We get a 4 and a 5, and then that completes the whole sequence, the 5th wave. So right now, strongest, that fits this, but you can see that it's like, well, you might think that that 3rd should be this, and it's a lot more muted because of the low volume. Still did price did kind of flip and move, but not with great volume. So for tomorrow, a lot depends on that morning. A lot depends on the interpretation of those numbers, because it continues to be reflective in terms of they could just turn this thing and flip it and take it right back down. And that's going to produce a whole different thing. A longer 4, or is it something else? So we got to remain fluid in the count right now. I like the way this did, and in the NASDAQ, I'm also expecting a continuation to the upside. It's a little bit different of a count, but it's the same momentum. It's the same thing. And it's not that we're at this type of a level where we're starting much lower and it just exploded higher. If they did it from here, it would truly send, in my opinion, the wrong message, because the thought process is that this current wave, if indeed it's an intermediate second wave, cannot break 4327.50. If it does that, it really shakes up the count. And I'd have to move that primary A over here, and this turns into a primary B wave, which then gives it enough room to come all the way up to there. Now, is this what I expect? Not really. I really don't. But again, I would be remiss if I didn't include it, because if it should come on, I feel that everybody needs to know, well, what happens to what we're doing? The fact that we're still in a corrective move, yeah. But what changes is the degree that the push could become. Does not change what comes next. From whatever finishes, whether it finishes here or whether it finishes here, the next move is a severe slam dunk down. That much I'm going to leave in place, but it's how we get to wherever this thing's going to top and what drives it. So, and this all basically, in my opinion, would have to happen before December the 14th, because I don't think that the Fed is going to do what they're hoping for. I don't see evidence. So I see more evidence that people want to get out, which is why I'm not changing this, but I have to include it. So I do think we finish this intermediate wave 2 up in this area without cutting up and breaking above that area. We'll see how these numbers go. We could do a quick run to 42, come down and come back. And then this thing would be all done. Now, whether they want to do that between now, and tomorrow, and leave Friday in the hang, they could, absolutely, don't get me wrong, but it puts another spin on a half-day Friday. All right, so back down to the hourly chart. Let's finish this up real quick and get over to the NASDAQ. So things are still positioned nicely for the market to rise. We know we have that resistance. We have it at 40.50. And then we have it at 40.85 to 4100. Above that, consider 41.25, 41.50. 4175, all as points of resistance. 4200, yes, in the picture. What I can do is put up some fibs to take a look at what the expectations of 5 could be. So we're just going to put extensions from the start of wave 3 to the top of wave 3 to the bottom of wave 4. 618, wave 5 being 618 of wave 3 is actually one of the most common. That's 4100. 100% is 4215. So fib has got that covered and shows us the possibilities. So we can trade it, number one. If you're positioning yourself in advance of what is to come, you might have to make some modifications or adjustments or just managing that position. Because you're going to have to be able to, if that number comes or any of those numbers come in combination, drive this thing up here, it's going to bring with it adjustments that are going to need to be made in advance of Friday's expiration in Apple and Amazon and AMAT and AMD and Google, et cetera, et cetera, et cetera. So you can go to these top lists of the NASDAQ and the Dow and the S&P and see what those movers are within it. And as far as the NASDAQ and the S&P go, you're constantly going to find Apple, AMAT, AMD, Amazon, et cetera, et cetera. When they push this market higher, they start taking these stocks through strike prices, causing adjustments this close to the expiration, the larger that adjustment has to be. And that could work in both ways. That could work on the upside, it could work to the downside. Okay, so I'm going to leave it there. We know where we could put some parameters, but they remain potential. All of this is potential. And it can do it, literally, folks, it can do it on those numbers. The market's thin. But once we're done counting the 5 and it's clean, and we've not broken any rules, then I am going to put a 5 up there, and I'm going to put the C wave, and I'm going to put 2. So all of that remains. And once that happens, then we'll see if this fireworks begin. But that's how close I think we're getting. Now, whether they really want to drag this out, they may drag it out through Friday, but if they really want to start dragging it out next week and the week after, it'll be interesting. Okay. Downside, I see us having a lesser potential, but I got to tell you, I felt that way in the NASDAQ this morning, and the first thing on the opening is they threw me a curveball and took it down for what I thought was just going to be a retest of yesterday's low or the Globex low. We'll get to that in a minute. All right. So if downside starts, then it has to be that this is complete. Because if it gets severe, that's what I'm going to be looking for. I'm going to be looking for this thing to just go and start breaking these moving averages. They're all it's just so in alignment on the hourly chart to go up. I will tell you that. So that, along with that, kind of tell me that we're going to get that pop to the upside tomorrow morning before the market opens. It'll be interesting what kind of follow-through might come, because who knows how those orders are going to be stacked. All right. Over in the NASDAQ, as we just open here in Globex, the count remains the same as I was doing it previously. An ABC, this retest of that Globex low, I'm marking as the completion point for wave C and wave X. Let me open that up because it just gets, the NASDAQ has been more screwy in terms of, here I'm thinking this was the C and the X. 1, 2, we're ready to launch in the third. There's a buyer. We're breaking. And the next one is like, no, we are not. In fact, we're going to go down. And at my mind was thinking, you're going to break it and go down to 1444. We're 11,444. And I'm like, wow, what's going on? And I didn't want it to go too far because then it ceases to be what I'm thinking. And then it turned, and the very next bar puts in a bullish engulfing bar. So it was a retest, but basically I think it would have broken. They were continuing to sell the NASDAQ, but they were finding buyers and had been finding buyers in the S&P or in the broader market. The Russell, the Dow, were all substantially moving higher while the NASDAQ was battling to even turn. And then it did, and then it just took over. And what really stepped in would have been Apple, Amazon, all the big boys, Microsoft in particular. And that may be the case. Now, look at our moving averages. They are coming in, and the 4 is now above that 200 SMA hourly chart. The 8, if we continue to rally, it'll be no time at all. It'll be right above. The 20 is crossing the 50. The 50 is turning. The 200s have already actually turned, but the EMA is like, okay, I'll start to go up. So while I'm not really looking on as far as the EMA is telling me, it's like, this is all going to come a tumbling back. But very likely not before it gets up above there. So the rally potential in the NASDAQ exceeds the rally potential in my mind than in the S&P. But the S&P, the NASDAQ could rally a good 300 to 500 points, and the S&P doing 150, and 150 puts it up to that top level in the S&P. So again, as long as I can correlate the two with their fibs, then I want to just show all these possibilities and what could happen tomorrow. But again, it has kind of been what I have been looking at and analyzing that we are doing in the case of the S&P, finishing a C wave with a nice 5-wave advance. And here in the NASDAQ, finishing that C wave with a complex wave 2 pattern, being ABCX ABC. And the second ABC is going to roll out pretty quick. Because then basically, we've got to get through an A, a B, and a C. So here it's a little bit different. We might get a blast, and that's going to be wave A. Then a decline, that's going to be wave B. Not necessarily breaking all the way down, but then another rally back up. And still, I think, end up above 12,112. I mean, I think we've been as high as 18. Right there. What is it? 18. 12,118, 119, right there. We get above that, get up to 12,200. Sure. Now, what can I do to put on some fibs that are going to show what we're doing? So if I don't have enough yet, because I'm inside of the C wave. So how am I going to really measure that out? Well, I'm going to look at the A to the top. Let me go back. Hold on. Let me go back. And now go back down to that hourly chart. Because I did look at it before and I thought I had to be able to do this. And I'm going to look at the entire C wave down to the X wave and see what that might, because otherwise I'm doing this. Oops, get back there. There you go. To do wave A. And I think that works as well. So we're now at 11,742, and maybe the resistance at 100%. At 11,842 will be our A wave. We get a B wave and then a C wave. Now that could happen overnight. And then what we're ready for is the C wave up, which could be like kabang, kabang, boom. And you would be able to put on an additional, as this unfolds, you would be able to put on an additional fib. Once we get an A and a B, now I'm good. Because now I'm going to compare the C to the A wave. So as this builds, we can continue to build where resistance is going to come in. And where this maybe all completes. And again, I'm looking for an ABC. And they're coming in smaller. which is not unacceptable, right? We had a pretty fairly large ABC for the first group. It counts out clean. I'm going to call it an X wave, but they're coming in way inside this C wave. So, and in terms of the entire ABC up thus far, you can see on the 4-hour chart, very bizarre. ABC, ABCX, ABC done. And it will be acceptable, and we'll look at it as a double ABC. Weird market, but all of this is going to work because what we're looking for is the completion point for an intermediate wave 2. And that's the most important point. And again, as in the NASDAQ, if this thing gets weird and this thing really starts to just pop against the grain, I mean, you know, the S&P's it's kind of rallied better. And we get knocked down, and then we get knocked down. And so the sellers are in tech more than anywhere else. And they may stay or they may run it up here. We got 12,500 up top, and that is 618 for wave 2. But we're still meandering around 11,750. And we still then have 12,120, let's call it, to get above. But we have potential that we could end up at 12,500. How is that going to fit in to what we're looking at? Well, you're going to have to come back out and realize that what we're doing is this A wave could end up here. We get a B wave, and then a C wave takes it all the way. And that then could take us into that short expiration. It's going to depend what they want to do with these big tech stocks. And I think we'll see more of that as we move closer to year end. And we're going to see where firms, large traders, are really gathering around to get out. So maybe the goal is they need to start selling Apple or selling Amazon. And so there's a lot of different things that you can do, and you can put it on and you can set it up where that's the strike, and that's what they're going to do, just so that the position comes off. All right. So for tomorrow, the possibilities are there. I would think, see, we got a little bit stronger here in terms of the squeeze. And don't think it's over. We're looking at this one, and we're looking at these. So we got one, and then we got another. So we get one, and then another. So ABC, that's what I'm looking for up. ABC in a minute degree to put in the minor. Actually, we're doing a minor A, a minor B, and a minor C. So it's a minor degree, ABC. And inside of it are the minutes. So this could be minute A, B, C. That's A. Then we do the B, and then we're going to get a C. Downside from here, I think it's limited, but that's what I thought coming in to today, and they threw me a little curveball there. The day ended up okay because the move that I was expecting did catch on, and it took over. And I have no reason to suspect that, unless it's news driven, for tomorrow to be anything different than a continuation. News driven, and it starts to drop, you're going to have the same fate with these stocks. They start sliding through strike prices, adjustments must be made. And they come via the stock, and they come via the options, and they, if they're going to do what they now commonly call a gamma squeeze, whatever side, it'll start and it'll happen. And it just aggravates the move in progress. If you need to sell because you're getting longer as the market drops, there are going to be levels where you just go ahead and do it. Well, it just contributes to the selling. That makes it even harder. And then we really start to break down. So there are many things that we try to attach to what contributes to a market going up or down, being more fundamental. And often they're not. They're tied to positions and options. They're tied to futures. They're tied to different stocks and how those are trading. So it becomes more technical. Now, that's not to say that reality via the fundamentals, via data that shows us economically what's happening, that earnings as they're reported, but again, even the news items, that the collapse of the FTX, the collapse within Bitcoin, that's equity, that's money leaving the system, lost. Somebody else has it now, and they're not coming back. So there's money leaving. And that's kind of what we put together here. And so it's the flow of money that produces a lot of what we see. And then we have to add in reality. We are in a period of higher inflation than we'd like. We are looking at the possibility of a pretty strong recession. We are looking at the fact that the Fed will have to continue to raise interest rates to get a hold of this. We are looking at ramifications down the road. So how do you want to fit that in? For tomorrow, I believe we continue to move higher. A lot will depend on the numbers. We may see the big move up right there at 8:30 Eastern, and then just work pulling it back down. So again, remember what we're looking for: an A, B, C. And truly the C wave, in my estimation, doesn't really need to do more than what I was saying here. All it needs to do is to go down and break that low. And it did. I mean, that low was here, but it did. And it didn't do it by much. In fact, it broke the low I was looking at by maybe $1 or $2. And this one was short by $1. So if it gets itself up here and the count works, we'll see. In the meantime, I will likely make an update tomorrow for Friday, simply because it's expiration and we've got all this possible activity that could happen. So the next update will be on Wednesday, the 23rd.